Welcome to SEB Corporate Research. Today in the studio we have the CEO, Kristina with Nelly Group. Kristina, welcome.
Thank you so much. Great to be here.
My first question to you is if you could give us an idea of the new strategy and vision in Nelly after the dividend of your former business areas in CDON and Qliro. What is Nelly going to be over the coming years?
Well, I can start off by just mentioning the relaunch that we're in the middle of, that we've talked about the last quarter. We are relaunching the company, relaunching the brand towards a much tighter target group, so 15 to 25-year-olds in the Nordics. We have a very strong focus in strengthening the love to our brand, to our community brand, and increase frequency. So market share in the Nordics. We're also relaunching our operations, so aiming to improve cost efficiency throughout our supply chain, and relaunching organization. We're centralizing our operations to Borås, so closing a couple of offices in Stockholm, and also moving our warehouse from Falkenberg to Borås. So in essence, we are strengthening our community-powered brand and focusing on sustainable profitability.
You've also obviously taken a strategic decision to go with Zalando across Europe, which will probably have some other implications on your core home Nordic markets. Could you elaborate a little bit on why and what you are doing in your European business?
Well, we made a strategic decision to focus on the Nordics to become even stronger and to create an even stronger love and higher frequency in the Nordics. So, meaning that we have exited our own operations outside of the Nordics. Partnering with Zalando is an opportunity for us to still have a presence outside of the Nordics through the Zalando business, of course, to a lower but still profitable with a profitable margin.
Also, I meant to ask you, your private label sales have historically been very important in terms of driving margins and an important share of sales. Where are you now, and what do you expect to be in terms of share of private label sales?
We've been affected in terms of private label share as a consequence of the pandemic. We are very strong when it comes to private label in party dresses. And I don't know how many parties you've been to the last year, but of course that has been a category that has suffered quite a lot. So by definition, our share of private label has decreased from a total business point of view. However, our share has increased in other categories and in other segments where we historically had a lower share of private label. So we are at around 40% in private label. Our total offering is to offer a head-to-toe look where the core and the essence in our offering is our private label. But external brands are important to complement and to create the total head-to-toe look that our consumers want and want so badly.
Finally, my question is, you have also taken a strategic decision, as you mentioned, to invest in a new automated distribution center and fulfillment solution. Could you give us an idea of perhaps some financial implications and what do you expect to generate from these investments?
We're very much looking forward to this move. And we are moving from the manual distribution center in Falkenberg to Borås this summer. We're investing 110 million Swedish kronor in capex and estimating around 35 to 45 million Swedish kronor in project-related costs, where 75% we estimate to affect the result in Q3. And the ambition, and we're aiming for a 35 million annual cost reduction based on 2020 volumes.
Thank you so much for joining us in the studio today.
Thank you.
And thank you for watching.